What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm going to talk about why tomorrow is going to be a very important day as we have CPI data and big bank earnings coming out. What you should be watching for as time progresses, but just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY in uninvested cash. The offer has been extended until March 31st, so check it out before they run out. Anyways, now let's talk about what's happening with the market. So as far as SPY is going, I just want to say that we had a very, very sideways day for SPY, the QQQ, and many others, just going back and forth between supply and demand. At the very end of the day, we did see some buyers try to defend, and the market did get a decent close with more tickers in the green than the red. However, the market is still very indecisive as we're approaching the notorious CPI reports, and that's going to cause a very, very big move for the way the market's going to be looking. We also have big bank earnings, so I'll talk more about that in just the next couple of minutes. But first, looking at this data, just know that Nvidia was in the red, Google's in the red, so was Meta. So a lot of these big tech stocks were in the red, so was Tesla. Then we had most tickers kind of like flat from Amazon, many others, and some sectors in like finance and manufacturing were in the green. But for the most part, the market was more mixed. Once again, the market is mixed ahead of CPI. Now, when it comes to the way the market should be moving, just know this. Today, we got the PPI reports, which tends to be a leading indicator for CPI. And as a reminder, on a month-over-month basis, PPI for all items and core PPI without food and energy basically tells us that the data did see a bit of a decrease. Wasn't too bad, a little bit below expectations month over month. Then for core year, year over year, we were at 3.5%, aligned with expectations. But for all items PPI year over year, this was a little bit above what we saw from before. Yes, this was technically aligned with expectations, but there was a slight increase in that. That's the only thing that got a slight increase. And there's a possibility that CPI may do something very similar. So tomorrow is going to be Wednesday, January 15th, 2025. 1 hour before the stock market opens at 8:30 a.m. Eastern Standard Time, we have the CPI data report coming out. Okay, core CPI month over month is expected to be between 0.2 and 0.3%, basically the same as what we got in the month of November, the same data as well. And then for core year over year, we're expecting 3.3%. That is once again the same as before, so let's hope that that is good. And then for all items CPI month over month, we're expecting 0.3 to 0.4%, almost the same as before, maybe a tiny bit higher. We'll see about that. And then for all items CPI, this is for everything year over year, we're expecting a 2.9%, a slight increase compared to before. Now, given that PPI showed a trend where everything was aligned with expectations, not really moving much, there's a good chance that we might see all the data aligned with expectations. But for all items year over year, that's the only one that might be a little bit above. This might show a slight increase. We'll see if this is above or below expectations. That's going to be one of the biggest ones I'll be watching for. So this one right over here could be a little bit off. Everything else should be close to expectations in my opinion, but we'll see about that just to be safe. Kashkari then gives a speech, and besides that, there's nothing else too crazy. At the same time, we also have the big bank earnings, so I want to remind you guys about this. Before market open for tomorrow, we have JP Morgan Chase, Citi, BlackRock, Wells Fargo, and Goldman Sachs all announcing their earnings. So get ready for this, guys. This is going to cause some more volatility. Anyways, looking at the chart for CPI, here's what's concerning the markets, okay? This is the CPI chart, guys. As you can see, for core, it's been very flat for the past 3 months, not really moving at all. And this is not the best of news, at least thus far. Then for all items CPI, the blue line is showing a slight increase for the past 2 months, not the best of news. So what's happening is as we're starting to see inflation going up, which is what it's been doing for the last couple of months, right? We're seeing this affecting the bonds market because we're seeing the prices adjusted, which are causing yields to go up. So if you look at, for example, our 10-year treasury yield, it's been skyrocketing ever since this year started for the last couple of months. It's going up and up and up and up in anticipation of higher inflation. So with high inflation, we're seeing this going up, and this has had an inverse effect on the overall stock market, right? Yields are going up, the dollar has been rising, and as a result, the stock market's been slowing down. So when this data comes out, I just want to say that compared to crude was very flat in December compared to November. There's a good chance that CPI should be flat for the most part, but I'm not 100% sure about that. We'll see about that. But just to be very, very clear, if we get a decent CPI, if CPI is below expectations, we're going to be watching our yields. They may start coming down a bit. Same thing, excuse me, same thing with the dollar. This could start coming down a little bit more, and then that could cause the overall markets to try to push higher. But then if it's the opposite, if the dollar gets a big bounce and the 10-year treasury yield gets a big bounce because CPI is hot, that could also cause a rug pull. So keep that in mind. We'll be watching this very, very closely. What's very important about this is the way it's going to be affecting the Fed's policies. If inflation's too high, the Fed is going to be incentivized to not cut as much. If CPI starts coming down and it's more tame, the Fed has a better incentive to cut a little bit more, which tends to be better for the economy and better for businesses. So that's why the market is in a very, very dire place right now, and the CPI report is going to be very important. All right, so we'll see what happens. As of right now, I think the data suggests everything should be close to expectations, except I'm not too sure about all items year over year that I'm not too sure about. That could go either way, so we'll be watching that very, very closely. I also want to add the big bank earnings, so get ready for that as well. That's going to cause some high volatility. We'll see what JP Morgan, BlackRock, and all these big banks may be causing. I hope they do well. I hope they have good guidances, so we'll see what happens tomorrow morning. Besides this, just know that the fear and greed index is currently at fear. That's making up the majority of sentiments in this market. And then momentum is at fear right now as we're approaching our 125 daily moving average. Watch and see what that leads to. Besides that, the put to call option ratio is currently at extreme fear. That is what's making up the majority of sentiment right now. There's a lot of fear building up in the markets, so please be prepared for that to affect things. So the fear is building up, causing the puts to continue to get bought back up. Will we see a short squeeze because of this? Will the market squeeze those shorts, or will we see another big pullback? We'll see about that. The VIX is also neutral, it's stuck in the middle. This could go either way as it's waiting for CPI. So to me, it just looks like the market's waiting for CPI. With that being said, what do I see here? Well, there's a bearish case. Okay, we have this giant head and shoulders on SPY. If we get a rejection, we can't break past 584. We're looking for a rug pull. If we lose 580, look for 578. And if that fails us, if this low of the day fails us, we could be looking for a revisit of the lows from Monday, taking us back down to 575 and eventually 572 or below. That's going to once again favor this head and shoulders panning out. That's the more bearish case of CPI is hot. The bullish case is that we try to break past 584. If that breaks, we're going to be looking for an attempt to try to fill this imbalance. You could argue there's a left shoulder here, a head, and then a right shoulder. So a mini inverse head and shoulders for the last couple of days. That could lead to this trying to push up to about 588 or so to fill this imbalance. It could go either way, so we'll have to see about that. Given the fact that we got this push at the end of the day, I'm hoping we do try to break past 584 and try to fill this imbalance because we've been trying to base here. So technically it does favor that it might try to push a little bit higher to try to maybe gap up and try to get close to 588. And we'll see if we get a rejection off that or not. But I do favor that a little bit more, just a tiny bit more. Now, as you guys know, I am not some kind of fortune teller. I don't know for sure what the data will give us, but that is what I think is the most likely possibility looking at this setup. We favor upside a little bit more on SPY, considering we close green and also because of the inverse head and shoulders. So we'll see just to be safe, but I just want to say that looks a little bit more probable. We'll see about that though. For ES, we're in the middle. So if we're bearish, if CPI is hot and we lose 58.80, we're looking for a dump back down towards these lows at the low 5,800 area. If that fails us, we dump even lower. We could be going all the way down to 5,700 if that fails us. If we're bullish, we want to break past 5,900, 5,930. If that breaks, we're looking for a much larger pump. Now on ES, we have a left shoulder, a head, and a right shoulder. If we break past this resistance at 58.90, we're going to be looking for an attempt to get back up to 59.31 and eventually these higher levels. And if we end up rejecting here, we could be dipping even lower. So it could go either way, but because of the inverse head and shoulders, we could still try to bounce. So I'll be watching this very, very closely. I think that there's a setup here and there's potential for it to pan out because we're forming wicks here, but we'll see. Although it does technically favor upside a tiny bit more, we'll see about that just to be safe. Now, Nvidia has been a lot weaker compared to SPY as we have this big red bar and we're making lower highs and lower lows. When you zoom out, it's been just trading sideways for the last couple of months, going back and forth between the 128 zone to about the 150 area, right? It's been going back and forth. So in this case, because we rejected off our 20 EMA, this favors downside a tiny bit more looking at this from technicals. If we're bullish, you want to see this get back above this level right over here around 133. If we break that, we're looking for a move back up towards our 20 EMA at 135. If we can't break that, this is going to be at risk of dumping all the way down towards 127 again. So be careful. It could go either way. Looks a little bit weaker technically, but we'll see what depending on CPI. For Bitcoin, we have a nice double bottom like pattern, but we're completely indecisive. If we're bearish, you want to see it lose 94,800 to start dumping. If we're bullish, you want to break past 98,000 to start pushing. As of right now, we're in the middle going back and forth, so it could go either way. So we'll see what happens with the data that's coming out. For Tesla, unfortunately, Tesla's not looking that great because we had this key support right here. This has been holding us up since the month of October. You guys can see this blue trend line. But the problem is Tesla bounced off this, came back down, bounced, and then it's not doing the best job at holding it. So it's trading in a range right here. Tesla has been rejecting near this like 414 area to about 420, and it's getting bought back up around 380 to about 375. So as of right now, it's going back and forth and back and forth. And this setup does favor downside a bit more for it to dip closer to the 380s. Unfortunately, it does look a little bit more bearish because of this big rejection because we're below our key support. But this depends on CPI. If CPI gets a spot back up, we need to try to reclaim 406. If that happens, it's going to try to bounce. If it can't do that, and we end up losing this support right here, and we can't hold above 390, we're looking for a dump back down to about 383 or below, all the way down to like 375. That's not too far from our 200 EMA. Could go either way, but because of this range, we do favor downside, so we could be dipping a little bit more closer into the 380s. So watch this very, very closely. For NQ, we're also looking a little bit more bearish as we're making lower highs and lower lows. We need to try to get back above 21,059. If not, this could be dipping lower as well. So I would love to see NQ reclaim the 21,000 area to start pushing for 21,250 plus. If not, this is going to be dumping all the way down to 20,800 or below. Technically speaking, we're rejecting off our 20 EMA, so it does look a little bit more bearish, but that does not guarantee anything as it depends on CPI. This setup favors 20,800, but we'll see just to be safe. On the QQQ, we're making lower highs and lower lows, but it has a very similar setup as SPY, very different from NQ. It also closed very differently from NQ. This was in the red, whereas NQ was in the green. However, just look at this. So we have a left shoulder ahead and then a right shoulder on the QQQ. If we're bullish, you want to see it get back above 509. If we break that, we're looking for the 512s all over again, and eventually 515. If we lose support right here around 502, we're looking for a dump back down to about 499. Could go either way, but because of this inverse head and shoulders, it could try to bounce for essentially the 510s. So I favor a bounce a little bit more. I think that's a bit more probable, but we'll see just to be safe. With the inverse head and shoulders here, I think we could try to bounce here, so we'll see if that ends up being the case or not. I hope that this ends up panning out, but anything could happen given the market's circumstances. So we'll see about that. There is an inverse head and shoulders here. It does favor it's going to try to bounce, but we'll see just to be safe. For Apple, same setup. There's a left shoulder, head and right shoulder. It's a little bit slanted. If we get a decent CPI, we're looking for a push to 237 or above. If it does not work out, we could be dumping to about 230. Even if Apple does dump, I think it's another buying opportunity. I think it's a very good opportunity for the long term, as we're very, very well below our all-time high. Apple has been on a bit of a downtrend. It does look a little bit weaker, technically speaking. For the short term, it does look like it could try to bounce temporarily, but we'll see depending on our data. With that being said, I went over the majority of tickers. Now I'm just going to zoom past the rest of these. So looking at Netflix, we're on a bit of a downtrend here. We have a more bearish distributive structure. We have a double bottom like pattern. If we get a decent CPI, it's going to be trying to bounce for 840 plus. If not, it could reject and start dumping down to about 820. But I would argue because of this big red bar here, it does look a little bit more bearish. Despite the double bottom, it does look like it favors like 820 or so. So it could go either way. And by the way, guys, I just want to say that the market's all over the place. We have some tickers like SPY, ES, and the QQQ that have inverse head and shoulders. But then you have other tickers like Tesla showing some weakness alongside Nvidia and Apple. So it's a very mixed market right now. Some tickers look decent, others look weaker. I want to make that very clear. MSTR or MicroStrategy is on a bit of a downtrend. But what's good about this is it's trying to rebound, so it's showing some life. I was talking about that yesterday. If we get a hot CPI and we end up losing just hypothetically 333, I could be looking for a dump to 329 and eventually 325. If we hold above 337, as long as that holds, we're looking for an attempt to get back up towards 350, then back up to about the 361 area. I favor it's going to be pushing for the 350s as the most likely possibility, but we'll see just to be safe. For Celsius, we have a double bottom like pattern right over here that's developing. I also want to add that we're making higher lows right here, so it's trying to base. This is showing a lot of signs it wants to base, but we'll see just to be safe. So if we break structure and we get a hot CPI, I want to see it lose 26. If that fails us, we could be dumping back down to 25 or below. If we get a decent CPI, I could try to rebound for 27.73. I think this chart's favoring 27 plus, so it's looking a little bit more bullish. Supermicro's looking bearish. We're making lower highs and lower lows. The reason for that is because it's rejecting off this 20 EMA. I want to see it reclaim 32 to bounce. If we can't get back above 32, it's favoring a move back down to 29. It is looking a bit more bearish, so the 29 is looking a little bit more probable. For Palantir, we're just completely range bound. It's been rejecting here, did not get much of a bounce. It's just flat. If we get a decent CPI, I want to see this inverse head and shoulders pan out, and I want to see this try to bounce back up to 68 plus. If we can't, if we can't do that and we reject off 66, we're looking for a move back down to 64. I hope the inverse head and shoulders pans out and we try to break out past 68. So we'll see if that ends up being the case. Overall, it has potential. For Rivian, we got this huge rejection, but we're range bound right here. So we have resistance in this 14 area, and we have support at 13, going back and forth and back and forth. It's completely range bound, so CPI is going to cause it to break in one direction or the other. It's completely stuck, so it could go either way here. It's just range bound. If we're bearish, we lose 13, we're going to be dumping to 12.5 or below. If we're bullish, we break past 14.06, we're going to be looking for a push. We're stuck in between this, so we'll just have to see how it goes, so give it some time to develop. For SoFi, as long as we're above 14.4, I favor a move up to about 14.85. If we lose 14.24, we could be dipping, but I think that this is favoring a nice rebound and attempt to get back up to 14.8. For the IW Morosa 2000, we do have potential to push up to about 221.6. That's where this imbalance happens to be. So it favors upside a bit more for 221.6, and if that breaks, we're looking for 224. If we lose 219, we could be dumping back down towards 217 or below as well. So we'll see which way we end up going. I'll be watching this nice inverse head and shoulders, and I hope that we try to get a bounce here. There's like a left shoulder, head, and a right shoulder here. It favors upside a little bit more, so let's hope we get that bounce to 221.6 plus and eventually higher levels. For AMD, we've been on a bit of a downtrend, but performing a double bottom here, so it's quite nice. We have support at 114. If that fills us, we dump to about 110. And if we hold this, we could try to rebound for essentially 119. So what's good is we're basing right here. This is very nice. We have like an inverse head and shoulders, a base that's forming. That typically favors a bounce for like 119. We'll see if that ends up being the case or not. For ARM, we also have like an inverse head and shoulders. We need to try to hold above 139. If not, we could be pushing higher. So I'm going to be looking for an attempt to get back up to 144, especially if we have this gap to fill. If we lose 137.8, we could be dipping. So we'll see if this inverse head and shoulders holds for a nice rebound attempt for 142. So I see some upside potential on ARM. So we'll see how things end up going. For coin, we have a left shoulder heading than a right shoulder. So we have 258 as our resistance. If this breaks, we're looking for essentially the 260s. If we end up losing support at 250, we're looking for a dump back down towards 244. It could go either way, but I like the fact that it's forming a base. So this typically favors an attempt to push for 260 plus. We'll see about that just to be safe, especially as we're nearing a bullish cross in the PPO. We'll see just to be safe, but it does favor upside a little bit more. For Amazon, we have a nice double bottom that's forming here. I want to see it break past 219.8. If that's the case, we're looking for 221. If we lose support at 216, we dip back down. I'm favoring 219.8 or above as the most likely possibility, so we'll see if that ends up being the case. Meta is looking so-so. It's been on a bit of a downtrend, but if you zoom out, it's been just going back and forth between supply and demand. What's good is it's still holding support around this 580 area, but it hasn't been able to hold above resistance. So this makes me suspect that this might attempt to push for like the 600 to 605 area, but then it could reject again, and it's just trading sideways. That's all I'm seeing for now. So we'll see how CPI affects this. Same thing with Microsoft. It might try to retest 419, and then it could reject again. It's on a downtrend, so I do want to say there's weakness on this. It might rebound first and reject. So I see some weakness. It might retest 419, and then it could be coming back down. We have kind of like a double bottom on Google. We made a higher low here, so it might attempt to push back up to 193. If that breaks, we're looking for 195 plus. We'll see if the double bottom leads to upside, so give this some time to develop. On GameStop, we're showing some weakness. We're barely at 28. If that does not hold, we're looking for 27.5. On AMC, we're on a bit of a downtrend. We have to see if we could hold above 3.25 or not. If not, we're looking for 3 flat. For DJT, we got this big rejection right here, so this could be dipping back down to about 37.5. So we'll see if we get some kind of bounce or not, so give this some time to develop. But overall, I think that there's a little bit of weakness that's developing right here. For the VIX, we're technically on a bit of a downtrend, which tends to suggest that the market has upside potential. And that's the reason why I'm telling you that at the same time, we have like the S&P 500 and ES forming inverse head and shoulders. So that makes me suspect this might dip a little bit more, and CPI might help the market pump. We'll see, just to be safe, though. We have to be very, very careful. The 10-year is It's at resistance. We'll have to see if we get a rejection here. It could go either way. It's very indecisive. The dollar is looking a little bit weaker, which tends to be good for the markets, but we haven't lost 109 yet at the 50 EMA. If we lose 109, this could be dipping a lot more, which tends to be bullish for the markets. So the dollar is still going to be giving us confirmation. We're kind of like waiting for that. So with that being said, guys, I want to thank you all so much for listening. My view of the market is very unbiased. I want to make it very clear that I am not some kind of fortune teller. I don't know what CPI is going to give us. My bias is a little bit more in favor of the upside, a little bit more looking at many of these charts like SPY, the QQQ, and ES. But ultimately, I don't know for sure. And the best thing to do is just be very unbiased going into tomorrow. Let's see what CPI gives us, guys. So get ready for CPI coming out for tomorrow and expect some high volatility. Like I said before, most of the numbers should be tame, except I'm not too sure about inflation year over year for all items. We'll see about that for CPI. With that being said, I appreciate you guys so much for listening. Please have a great rest of your day, and I'll be back tomorrow before market open for another update. Thank you for listening, and peace out.